Hi, this is Paul Goodwin with your Cabot Weekly video review. We've been waiting for the market to kind of declare itself. It hasn't made much of a decisive move, and it still hasn't made the decisive move, but I think we're pretty sure now that the short and intermediate term trends are down. In fact, short, intermediate, and long trends are all down, but not in a kind of catastrophic way. If we take a look here at the Halter USX China Index, which I use for the China timer, you can see that we have one bottom here, one here, one here, one here, and another here. Now, ordinarily I would have said you could connect these, and what you get is a series of rising lows, which show that although the market isn't robust, it keeps rising. But after this one, it broke that trend and is now, you can see this is the 25-day moving average. It's below that, but having dropped through that on 2 bad days, it's pretty much holding its own right where it is. So what that means is another couple of good days could put us right back in business. But you don't want to second guess these indicators too much. If we take a look at the S&P 500, we will see essentially the same thing. Same thing, a low in early July and a series of rising lows, and then breaking through that trend. So the S&P is significantly below both its 25 and 50. The Dow Jones Industrial Average will see essentially the same thing. So with the trend against us, it's time to tighten up your stops and avoid new buying except in small amounts, and then only if you have large amounts of cash already on the sidelines. The market opened up today on what seemed like pretty good news about new unemployment claims, but then just ground its way lower all day and finished down for the day. So I do have a couple of things for you to look at here. Here's Vance Infotech. This is one of the holdings in the China and emerging markets portfolio. And you can see here that the long-term trend, and this is a daily chart, the long-term trend is clearly up. And although there has been a kind of a trading range here for a while, you also see that it hasn't been giving up much to the market. And this is a kind of a divergence where leading stocks hold up, but the market as a whole goes down. VMware, an even stronger example. You can see that from here, stock took off and has done even slightly better. So strong stocks which you do not want to let go of just because the technical timing indicators have turned negative, but you do want to pull in your horns some, just get a little more defensive. So I don't have any new things that I would call buys this week. A few fascinating charts. This is Jinko Solar, a brand new Chinese solar issue, and we don't get to see. I'll put it on the weekly chart. We don't get to see anything this dramatic, generally speaking. With volume heading up like this and the stock heading up like that. Of course, the rule is that you don't get huge gains without huge risk, and when something is going up this quickly, the chances that it can come down just as quickly are there. But still, again, look at the daily chart. You see it has risen here and now is making a little base right here. So something to think about. And finally, this is called Make My Trip Limited, and it is a new Indian stock. And having new stocks from India arrive on U.S. exchanges is always an occasion, because we have fewer than 15 of them that trade as ADRs, or American Depository Shares, on U.S. exchanges. So it's fun to see. Volume is going down a bit, but the stock is clearly up. Fun to see. Put it on your watch list, and we hope that the market will find a bottom here pretty soon, and we can get going. So that's all for this week. See you again soon.